it? Okay. All right, perfect. So today we are diving into the other half of the book. Well, actually, there's only 5 more chapters left. You guys took majority of the exam in the last class. So here we're going to be going over the last 5 sections, which is going to be chapter 8, 9, 10, 11, and chapter 13. And yeah, so let's go ahead and get through with all of this. So chapter 8, we're going to be focusing now on to inventory. So what is involved in inventory? Well, we're going to be looking at how QuickBooks calculates and keeps track of inventory. We're going to also see how to set up inventory parts, as well as we're going to be also looking into how to create purchase orders and how that's very useful when you're using QuickBooks. It's the best way to use to keep track of your inventory is to use QuickBooks for the purchase orders section, okay? And I'll explain why. And then lastly, understanding how to get billed when we receive the inventory. And lastly, how to adjust inventory for any reasons that the either the inventory either when you went down to the basement and you took a physical count, or what maybe due to the market it lowered the pricing of each item. So we'll talk about that later. And then setting up group items, that's going to be our last thing. But for today, since it is already 10:30, we're just going to power through for the last hour to try to power through and see how far we get. Okay, so the first thing it's going to ask you to do is to open the file here. I've already done the work for you, so you don't have to sit there and wait. But the very first thing that we're going to be looking into when we're dealing with QuickBooks is how QuickBooks tracks inventory. Okay, so that is the very first thing. And then if we look at the home page, it gives us a little diagram saying this is how we keep track of inventory, right? Again, you start off with your purchase orders, then you receive the inventory, and then you get billed, okay? And then from there, that's when you start paying your bills, and then, it goes straight to either, other things like that. So this is the web of, the flow of transactions that you will see when we're dealing with inventory, okay? So the very first thing I want to point out is that there are 2 types of tracking methods when it comes to inventory, okay? And for those who were in my previous class, you guys should know the answer to this. And for those who will be moving on to my accounting class, there are 2 ways to track your inventory. One is perpetual and the other is periodic, okay? And to tell you the difference between the 2, okay, you can go ahead and read this box. But for QuickBooks is going to keep track of your inventory using the perpetual method, okay? So what is the definition of perpetual? It means constantly or consistently. So what does it mean by that? It means that every time you make a purchase, every time you make a sale, you're constantly keeping track of your items, right? Every time you make a purchase, you're counting how many items you received. Every time you sell something, you're subtracting all the items out of your inventory. So at the end of the day, you should always know how much you have in inventory on hand at all times. Where periodic, you don't really care about keeping track of it. In fact, you do keep track of it. However, you don't need to keep track of it every time you sell something. When you make purchases, that's the only time you're keeping track of inventory. You're just making a purchase. Okay, good. I should have at least 100 items now. I made a purchase for 100 items. I should have at least 100 items in, right? It doesn't keep track of it until you physically go there and you check it yourself and you're like, oh, okay, so I only have this many items left. So for you to keep track of it when you sell the item, you don't keep track of it when you're using a periodic inventory. In fact, the way that you would calculate how much you sold is you would see how many physical items you have left in inventory, and then you would just assume that you sold however many because you don't have it anymore. Okay, which is not actually the best way to keep track of your inventory, just because, if someone decides to take a cup, you wouldn't know because you would just pretend that you sold it. But in reality, it wouldn't work because your sales, right, will not match your inventory. Okay, so you would find a discrepancy there. Or if you forgot to update your inventory because you said you purchased something, but it was broken, so you returned it back to the vendor and you forgot to update your inventory, you wouldn't have known that until you physically go down to the basement and just count. So that's the dangers of using periodic inventory versus perpetual. Okay, and for QuickBooks, you will be using perpetual. Okay, so for every sale that you make, every purchase that you make, you're constantly updating your inventory. All right. So that is that. So here it's just showing a little example of what would happen when you actually view the information, but we don't need to do this part. Our main portion that we're going to be looking for is going to be how to set up, or actually how to make sure that it's actually toggled on. Okay, so for this example, it's asking you to make sure that you activate your inventory parts. Okay, so for QuickBooks, it should automatically do it for you. How do I know? Because you have this section right here, which is involved with inventory. Now, if you don't have that, right, when you set up your company and you haven't decided whether you're going to sell an inventory part or not, and let's say you start off your business with a service, right? So you're not going to have that part. So what you can do is, let's say now, 10 years later, I'm going to decide to sell some products because I was able to produce it. So you're going to go to your edit preferences, and you're going to go to inventory, or items in inventory. You're going to go to company, and then you're going to make sure that you have inventory and purchase orders active. Okay, so by you toggling this off, it's going to get rid of everything that you see on your home page. But if you want it to turn it on, then you have to make sure that it's checked marked on as active. All right, and when you click OK. So again, you're going to have this portion right here if you activate your inventory part. Okay, so that's the number one thing that you need to make sure that you have active. All right, now we're going to go ahead and scroll down and introduce to you the chart of accounts / items. Okay, so every time we create a chart of account, okay, and we create an item for it, for basically, we're going to create a current asset, and it's going to fall under the category of inventory part. And what's going to happen is you need to set up an account for QuickBooks to know where to place things, but also where to take out of things. Okay, so you're going to be introduced to two sections. You're going to be introducing to an inventory asset. So this is where you're going to, every time you make a purchase, all the inventory is going to go under the current asset, under inventory asset, right? This is where all your items are going to be held under, okay? And every time you sell the item, there you're going to be introduced to an expense called cost of goods sold, okay? So what cost of goods sold is, it's going to transfer anything that you have in your inventory asset, and it's going to transfer it into the account called cost of goods sold. And what it does is it's taking out of inventory the items that you sold. So it's pretty straightforward. Cost of goods sold is taking everything that you have in inventory, and it's it's saying that you don't have it anymore. It's gone. Okay, so those are the two things that you want to understand. Okay, it's pretty straightforward that inventory is a current asset because you're buying items and you own it. Okay, you own this item until the day you sell that item, then you no longer own that item. So understand that when you categorize it, it's going to be an asset. Okay, and it's definitely going to be a current asset because, again, your plan is you're going to do something to it and you're going to sell it within a year. So it's easily convertible to cash, okay? So that is how we categorize our assets. And cost of goods sold, again, it is an expense to the business, right? If you're selling something, you need to expense it, or getting rid of it, you need to expense it. So again, we already have these accounts already in the chart of accounts. So I'm going to go ahead and show you on the screen just so then you're able to recognize them when we're in the chart of accounts. So here, the chart of accounts, it's going to be inventory asset. So as you can see, it's right here, inventory asset. This one is not specific on what items you sell per se. That is okay. When we go into the accounting class, it is generally advised to be specific, especially if you're selling like a lot of items, okay? But in this case, this is just the account. Where we can see that would be the items list, okay? The items is going to show us exactly all the specific things that we sell. But this one is just a regular account, okay? Again, you can create sub-accounts if you want to segregate it so then you have the individual accounts specifically for the inventory asset. If we scroll down under expenses, you should be able to see cost of goods sold. Cost of goods sold is right here, okay? So again, when you sell your items, you need to have a place to hold them, and it's going to be your cost of goods sold. All right. So next thing that we're going to be talking about is creating an inventory part item. Okay, so here we're going to go ahead and look at this information. Now, for your book, okay, your book has, since you guys are going to be downloading 2018 Premiere, your book is going to have an inventory center. Okay, 2019, we got rid of the inventory center because I guess it served no purpose. Okay, so in your book, you are told that in order to get to the inventory center, you need to go to the inventory activities on the home page, and you should be able to see the option to go to the inventory center. So again, in 2019, for my books, I don't have an inventory center. I only have to either change the value of my, adjust my inventory, or I have learned about more what you can do for inventory. Okay, I don't have an inventory center. Okay, however, one common thing that we all share is that you do have an items and service icon on the home page. So what that does here is if I were to select this is going to give me all the list of every single thing, whether it's an inventory item or not. And as you can see, it's categorized via either service, an inventory part, a non-inventory part. You know, it gives you a list of all the things that I'm able to create, right? But however, in your book, you have the inventory center. And for that one, it allows you to create new inventory items using the inventory center, okay? But for this example, I'm going to show you an alternative way, which is to go to your items list, right? So you can go to items list on your homepage, or you can go to lists, and you can be able to view your items list here, okay? And yes, and then for here, we're able to create our item by clicking at the bottom and clicking new item, okay? So here our first pop-up is going to be this, okay? Now, it first tells us that we want to create a new inventory item, okay? So I'm going to go ahead and create a new inventory item part. So I'm going to click inventory part. Once I've done that, all of a sudden my form changes. You're going to see a bunch of extra information that is pertinent to creating this item. In this case, I'll explain every single one because every single one that you do, it is going to be affecting everything. So for example, the cost of goods sold, right? So that's why you need to enter how much the cost is going to be. When you make a sale of the item, it's going to create the sales account, so then it keeps track of the revenues that you've collected for selling this item. And then lastly, it's going to ask you which section are you taking it out of. You need to take it out of your inventory, which is your asset. So it's involving 3 accounts: your cost of goods sold, your sales account, and your asset account. Okay, so these three things are very important for you to keep track of. Okay. So for our example, we are going to be creating an item here, and it's going to be for a wooden frame, if I believe so, a 5x7 wooden frame. Okay. Everything okay there? Okay. So here, we're gonna call the item, what is it? Frame 5 by 7 wood. Okay. In my description, it's going to be a 5 by 7 wooden frame. Wooden picture frame, I think it was. Picture. Okay. It is not a sub item. Okay. If you want to read more, a little bit more about sub items, go ahead and go ahead and keep reading the book. But what a sub item is basically, it's if you've created an item. Let's say my inventory part, right? The main item is going to be frames, right? My sub item is going to break down what kind of frames do I offer. So in this case, I'm not in the business of selling picture frames. I'm in the business of just selling the service. And if you like, I can offer you a package to give you a wooden frame if you want one. Okay. So it's not useful if you're not if you're not super specific on what you want to be selling. Okay. In this case, I'm generalizing. I'm going to say, well, I offer a 5x7 wooden picture frame. Okay. So once I've done that, I need to figure out what my cost is for the picture frame, and I need to associate a selling price. Okay. So the cost per item that you're going to enlist is going to be what it costs you to purchase it from the vendor. Okay. So let's go ahead and scroll down and see exactly. Let's look at our picture and see how much we're costing out each picture frame. So here we're going to recognize that it costs me $5 for every picture frame I sell, and I'm going to associate it with my cost of goods sold. However, I'm going to sell it for $9.99. Okay, and I'm going to associate it with a sales account. And then this one's pretty straightforward. It's going to be from my inventory asset account that I'm taking all this information out of. So let's go ahead and enter that in here. So again, what it cost me $5. Okay. And again, it's going to be a cost of goods sold. So do I have a preferred vendor? I believe I do. I believe it's going to be Ace Supplies. You know, they're the people that I'm purchasing from. So Ace Supplies is going to be the person I'm going to be going for. And then cost of goods account, it should be cost of goods account. I forgot I took off my account numbers, so I don't have my account numbers on here. All right, and then sales. I'm going to sell this for $9.99, and tax is going to be regular because if they're purchasing it through us via our store, it's going to be they're going to be taxed for whatever tax that they county belong into. So here I'm going to make sure that it comes straight out of my sales account. And then lastly, inventory asset is going to be the account that I have my inventory in. And this is going to be like, well, so the great thing about QuickBooks is it gives you reminders. So this one is going to ask us, what kind of reminders do you want to set up? I want to set that up if I have 20 items left in my inventory. I want to set a reminder to make a purchase right away. Okay, so I say I want to remind me if I have inventory that reached to 20 items. If I only have 20 items left in my inventory, okay. And then do I have a beginning on hand amount? Now, you want to be careful when you toggle this part, because if for any reason you've made purchases of inventory prior, you want to be careful on when you enter this information, because this is also going to increase your numbers in the inventory. But for this case, if we want to just be if we want to keep track of it from day one, you never want to enter anything in here in this bubble right here, because it will change the value of your asset the minute you add some kind of value to it. And then again, where the date is as of this, that is fine. You can leave it. And then we can go ahead and press OK. So here, as we can see, we've created our picture frame for the wooden one. And if you look right above it, we have one for metal. Okay. So this is us being able to put into information that we want to either utilize as either a purchase, like if we purchase something, this item line can be used. If we sell something, this item can be used as well. Okay, so it has dual and multi-use purposes when we create this account. Okay, now do not confuse that with a double-sided or a two-sided item, which we will look into when we move on to chapter 13. Okay, so make sure that you recognize that this is different from a regular two-sided item. Okay. All right, now it tells us the next part is to validate that, and now it gives us this, yes, it gives us this window. Okay, we want to make sure that nothing has changed here. All right. Now, here's a quick tip as well. When you are creating an inventory item part, right? Definitely one thing that you need to also recognize is you need to know what kind of products you are selling. Okay, so here in this tip box, it says right here, before setting up your inventory part, right, you need to recognize first off, what are the items that you're planning to sell? Okay, that's also number one when you're going into business, is like what is the point of you doing business? Are you selling an item? And if you are, what are the items you're selling? Okay, so again, the option that we had for when you pull down the list is you have service, you have inventory part, and then you have a non-inventory part. Now the difference between an inventory part and a non-inventory part is going to be how you keep track of it. Okay. Now there are a few things that the fine difference between it is, one, you want to keep track of it to the point where you need to know how much stock is available for it. You need to have a detailed report about the items. You need to know where the shipment is, how much you bought, all of that information. If you need all that information to be able to categorize your inventory, you're going to be using a regular inventory part. Okay? For items that you don't really care about, let's say I sell this item, but I don't care too much whether it's something I sell, or maybe it's a product you don't sell as often, right? You don't care for it So you don't care about any reports on it. You don't care about whether you have it in stock. You don't care if where the whereabouts about it is. If you don't care about it, then that's where you can select a non-inventory part. Now, what I tell my students is, in other ways, you can think of it as the perpetual and the periodic, right? When you're using perpetual inventory, right, you want to constantly update your inventory. You want to know where it is. You want to know all this, right? So that's where you can categorize it as an inventory part. A non-inventory part kind of functions like a periodic inventory, right? You don't keep track of it. You only keep track of it every once in a while. You know, you don't really care too much about it. You don't care about how you sell it. All you care about is at least by the end of the day or at the end of the period, whatever you want to call it. When you go physically take your account of inventory, you could be like, oh, okay, I guess I sold this many items. But in reality, I don't really care for it. So that's why you would use the non-inventory item for that, okay? Now, this is my way to showing you, but for the book's way, that is not actually correct. Periodic and perpetual are two separate tracking methods, okay? Just make sure that you know that QuickBooks utilizes perpetual and that you have the options to use either an inventory part or a non-inventory part, okay? And you know the difference. It's right here. It's written right here in this box, okay? Okay, so other than that, we'll go ahead and look at how QuickBooks actually calculates your inventory, okay? So here we recognize, okay. So here we're recognizing calculating average cost of inventory, okay? So here it gives you an example of how this works, all right? So in this sense, it is going to be taking your total amount of value and it's being divided by the total amount of items you have currently available on hand in your inventory, okay? When we move on to the accounting course, we actually learn 3 different types of costing methods. We learn FIFO, which is first in, first out. So a great example of that would be a grocery store, right? If you sell perishable goods, you want to sell those first, right? You want to sell that stock first or else it's going to go bad, okay? Then you're introduced to LIFO. LIFO is last in or first out. So a commonly used one would be like a cell phone or an electronic store, right? You have all of the same products except one model is better than the other one, right? You get different versions. So once you think about that, you're more likely to sell your latest models more often than you would for your older models, okay? And then for average costing, you can think about it as if it's a necessity that you carry around. So for example, a grocery store that sells water bottles, okay? No matter where you buy it, no matter when you buy it, you're going to cost it all the same because it's a necessity to everybody. You want to have it available and it's going to be it could be a stagnant price or it could be every time you purchase multiple of it frequently. So, and you want to make sure that you charge the cost, based upon what you're purchasing it for. So water would be a common one because no matter what, at a given time and point in time, water's not going to change its value drastically, okay? And you're constantly purchasing and you're constantly selling water, okay? So therefore, that would be the example of how average costing works. QuickBooks, okay? QuickBooks Pro, Premier, and Accountant only uses average costing, okay? So again, QuickBooks Pro, Premier, and Accountant only uses average costing, Okay, enterprise solutions will be able to do all of those features and more that I've talked about for the costing methods. Okay, so enterprise solutions can calculate your first in, first out, your last in, first out, your enhanced tracking method. They can go beyond and go to the extreme. And for a perfect example would be Walmart, right? Walmart sells anything and everything, right? They sell produce, they sell things with long life shelf, and they also things that they constantly produce and they get rid of as soon as possible. So they sell water too. So that is the reason why Walmart would use enterprise, because they're able to toggle all those different types of features to cost their the items that they purchase. Okay, and then for again, it says right here, only QuickBooks Pro, Premier, and Accountant can calculate average costing. Okay, so for the purpose of this class, your only main focus and you're only limited to understanding average costing. Okay, so here the calculations is going to be on the this is an example of the calculations of what QuickBooks does in the background. But for you, as the person, as the accountant or the bookkeeper, you don't need to know any of this. You don't need to know any of this. You don't need to calculate anything because QuickBooks does it for you. Okay, so again, how you're keeping track of your inventory is you're telling QuickBooks what are you entering and to notify me when inventory is low. But when you actually sell your products, you're not calculating this amount. It will automatically calculate it for you based on what you input the data for. So for example, I told QuickBooks that that it cost me $5 to sell a picture frame, but I'm selling it for $9.99. So QuickBooks is going to automatically calculate the cost of goods sold for you as $5 per item that you purchase, right? You don't need to figure that out. Okay? So, yes, so any questions about the tracking method and the costing method that for inventory and setting up inventory items? Any questions about that? No? Okay. So right now it is, go ahead. Okay, no worries. Okay, come on, let's keep focus on this. So here, let me see, it is already 11:07. So I'm gonna try to go through this first example real quick, and then we'll continue on with inventory tomorrow. Okay, so this one is invoicing for inventory items. Okay, so you actually have a few things that you can do as far as setting it up. Okay, so again, you can either create when you're selling an item, you can use an invoice, right? Okay, to make a purchase, to sell your items to your customers, right? You can also create a transaction journal. Okay, so again, we'll talk about that later on, how to get to the journal. And you can also use, okay, no, I don't, that's not important. Okay, so here, purchasing inventory, right? So again, you can use those three options to enter in data as far as for your purchases, but also for your selling your items, right? You can use an invoice to sell the items that you are to your customers. You can even enter it in through the journal, okay? And we'll talk about the journal in chapter 13, okay? Because for this one, you don't need to go through all those hoops. You can just this is why QuickBooks is made for. It's made so then you can go ahead and take a shortcut and be able to just enter in the data with an ease and using a form instead of a journal. Okay, so all that part I'm going to skip. Here is going to be purchase inventory. You have options to purchase inventory. Okay, so yes, you can go ahead and purchase the inventory using your vendor and writing a check to them, right? That is completely validated, right? However, you would have to manually enter in that information into the inventory in order for QuickBooks to recognize inventory, that you have something on hand. And how you can do that is you can go to the inventory asset account under chart of accounts and go ahead and view the register, okay? So I'm going to go ahead and show you that real quick. So again, this is my items. If I were to go to my chart of accounts, okay, and if I were to go to my inventory asset account, it's going to populate this. Okay, so this is my inventory, right? If I were to manually purchase all my inventory through a vendor and I have the inventory and I need to update my QuickBooks to let me know I have this inventory, I would have to place it here. I would say, well, what did I buy? Who did I buy it from? Or who did I make the check out to? And I'm gonna increase the inventory by how much I purchased the inventory asset for. Okay? That is one way you can enter it in. And I believe in your book it says you're able to do that through the inventory center as well. In this case, I don't have the inventory center, so I can't view that for you guys, okay? However, this is one way you can enter in information manually into your inventory, okay? And then the second suggestion says that if you want to keep a neat and tidy way of entering your information without having to manually put it in, is you just create a purchase order. And what this does is it sets up the inventory for you without doing anything. All you're doing is you're creating a purchase order, and how you enter in the inventory item is the next transaction, which is to receive the inventory. And what it's going to do is going to take that information and it's going to transfer it into your inventory immediately. No questions asked. No extra steps you need to take. It's going to go automatically transfer in there as soon as you validate that you received the inventory. Okay? And for this focus of this class, they do recommend that if you do number 2, right? If you utilize the purchase orders, it's highly recommended to use the purchase orders. And on top of that, you're going to get a more accurate, You're going to get a more accurate data or a more accurate accounting if you start from this square one right here. Okay? Okay. So, again, I'm gonna go ahead and create my first purchase order. Okay, so I'm gonna go ahead and find that page real quick. So this is how you can do it manually, but I want to use purchase orders. Okay, so here I'm gonna order. Using the purchase orders. Hold on, I had a train of thought and I forgot what I was going to say to you guys. It is very important too. Okay, so now I do have something that you guys need to know as well. When you create a purchase order, okay, so my previous students should know the answer to this, but for my newer students, I'm going to ask you this question. If I'm creating a purchase order, does that affect any of my accounts? Does this transaction affect any of my accounts if I were to if I were to create a purchase order?
No,
No. Why is that?
because it's a different transaction. It's not connected to the other ones.
Correct. And what is associated when you normally record a transaction?
I'm sorry, I couldn't hear you.
What is usually associated in order for you to create a transaction? What validates you to create the transaction?
I'm lost on that one.
Okay.
Sorry.
It's okay. You got the right answer. But my question is why?
Because it's not under the same, they're not all connected. They're not all on the same purchase. That's how I saw it.
Okay.
I don't
Okay.
know if it's that part is right.
Yes, that is right. That is right. It has no association to any accounts. But why?
Because, or would it be because you're ordering it and you haven't received it? So therefore you don't have the inventory in your system?
That is half the answer. Yes, that is correct. Okay. Is there money involved when you're doing a purchase order?
Not if you're ordering, because you're just ordering, you haven't paid for anything.
Exactly. That is the fine line to understand that a purchase order does not affect any of this account. It's not a transaction you need to record because one, you didn't pay for it yet. Two, you didn't receive the inventory yet. You're just requesting something. You're just requesting something to happen. The transaction happens when you receive the inventory, and the second thing is when you receive a bill, when you need to pay for it. Okay, so yes, that is the correct answer. It purchase orders is not something that you have to record in a transaction. Because it doesn't affect your accounts whatsoever because there's no money involved, nothing is being involved, you're just getting a quote, you're not paying for it, and you haven't received inventory for it. So good. Okay, so let's go ahead and dive into our first example, which is I think we are going to create a purchase order and we're going to purchase 40 of the metal frames and 20 of the okay, so Walnut Creek. We want to make sure that we have all this, and we're going to be ordering. Okay, I'm just going to go down to the picture. We're going to be ordering, yes, we're going to be ordering 20 of the metal frames and 40 of the wooden frames, okay? And let me check on the date on this purchase order. We're going to do this on February 17th, 2019, which I'm going to make it updated to today's date, okay? So again, when we are doing our purchase order, where can we find our purchase order? How do we create a purchase order?
The home page?
The home page, yes, right here in the icon, yes, right here on the home page. Where else can you go?
Vendors on the menu bar.
Venues on the menu, vendors on the menu bar. Let's see, is there a purchase order? I do not see purchase order. I see pay bills, sales tax. Oh, right here, create purchase orders. Yeah, correct. Okay. Okay, and you can also go to the vendor center. Okay. Where else can you go? I'm going to go ahead and go to the vendor center. Okay. Where else can you go here to create a purchase order?
manage transactions?
Okay, but make sure that you're selected the correct person. And then manage transactions. Yes, you can do purchase orders. Okay, go ahead. I heard someone go ahead and say something. Anybody else?
After you select the company, can you right click on your mouse?
Yes. Right click and you should be able to do purchase, enter checks, purchase, right here, create purchase orders. Yes, you can. Where else can you go? I think there's 3 more ways.
Icon bar. I think we still have icon bar.
Yes, we still have the icon bar. Which item on the icon bar?
I think you have to go under vendors first. I forget that one.
You can go to vendors. Yes, and where does the vendor take you?
To this, I think it takes you to this page, like the vendor information. And then
Mhm.
you can,
We call that the vendor center. So yes, so you go to vendors. Oh, that's the wrong one. Vendors, and it will take you straight to the vendor center. Yes. And then you'd be able to go ahead and do whatever the next step is. Where else can you go?
Can you go to new transactions in the vendor center?
Yes, you can. Purchase orders right here. And then let me see. I'm gonna double check this one. I'm pretty sure you have it on your build tracker. Just hold on. I need to move my mouse up. Let's see. Build tracker. I believe you should be able to go to manage transactions and purchase orders. Yes, you can. Okay. So I'm gonna go ahead and do that because I'm already here. And I am going to make purchases of this. Okay, so the person that I am going to be purchasing these items from is going to be Ace Supply. Okay. Again, he belongs to the Walnut Creek location, and invoice ship to it should automatically populate everything. I'm gonna change the date again to April. What was it? April 17. April 17 for 2020. Okay. And I'm going to go ahead and make this 2021, okay? Just so that I can keep track of all my invoices from 2020, okay? Now it's going to ask me, well, what do I want to purchase from this vendor? Well, I'm going to purchase, my first item is going to be the metal picture frames, okay? So I want frame in metal, 5x7, okay? And then it's going to automatically fill in all the information for you right here. I also want to make purchases of my wooden picture frames right here. So I believe it's 20 of the metal, and I want 40 of the wooden picture frames. And if I were to go ahead and calculate the total, it should be giving me a grand total of all this, okay? So again, because of the whole vendors and customer relationship, and they're a wholesaler to us, in this case, we got exempt from sales tax, okay? They did not tax us for this. They did not tax us for these items because we're planning to sell them to to our customers, right? So in other sense, they give us that privilege to exempt us from sales tax. And then I think in your message, I'm going to write, I guess, nothing. Vendor message. My memo is going to be 20, 20 metal and 40 wooden. Okay, is there a message I need to write to my vendor? Let's see. Nothing to write here and nothing to write in the memo. But I'm going to go ahead and write the memo just so that I know I purchased 20 metal and 40 wooden. And then I'm going to go ahead, oopsies, I'm sorry. And then I'm going to go ahead and validate my screen, make sure everything's correct. And I'm going to go ahead, click save and close. And you got the beep of approval. So here it automatically populates right here. A supply is my bill, is a pending purchase order. Okay, it's waiting for me to receive the inventory, and it's also waiting for me to receive a bill. Okay, so we're gonna go ahead and stop here for today. And tomorrow we're going to go ahead and continue to see what happens when we receive our inventory. Okay? So let me go ahead and... Okay, bye. If you're done.
Hi.
Oh, hi.
Hi, everybody.
You said hi. I thought you